MGM crypto news analysis here. It is February 6th, and before I go into this video, I was just saying another thing, talking about in zero or buy sell signals by MG tickers, all of them own conviction for where I think the current market direction is going, and I'm not being paid to talk about MG tickers. So let's talk about the price action of the majors really quick. So Bitcoin is the number one crypto coin in the whole world, and basically right now. So I did say yesterday we're around here 96K. We'd probably bounce. I thought we would bounce a little higher, but actually it went above here to a lot of liquidity in this mini ranging zone. So currently Bitcoin is ranging from 90 to 110K it seems, but it's in this little mini ranging zone from 96 to 100K. So it's a bit weird, or at least for now. No, not 100K, but 99K as we see from liquidation heat maps. But it's currently in this ranging zone. We don't really know if it's gonna do a leg down or leg up. It's pretty dependent on news actually. So there's a lot of uncertainty in the market right now, especially Bitcoin. And a lot of traders, when they see a market like this, they're just usually sidelined. So it's pretty dependent on what the fuck is going to do. But most likely it's at this fair value of 96K. That's what the market has decided. And if we also look at Bitcoin dominance, so it looks pretty bullish again. Bitcoin dominance is going to the moon. So it's doing what is called the cup and the handle. Insane. But Ethereum as well. Ethereum doesn't really look too hot in comparison to Bitcoin. It actually broke down its leg, and most likely it's actually going to go lower and retest this wick here. So if I were to draw some sort of a fucking rectangle, most likely it's actually going to drop down here 22.5K or some shit, or 2.6K, and actually do some sort of a bottom range there. It's essentially going to probably go down to this level. Doesn't really look too hot for Ethereum. But Bitcoin, on the other hand, it's also dependent. But it also depends on if Bitcoin actually moves for some reason, like if there's some insane news, then perhaps it could break out of this range and Ethereum could actually recover a bit. But for now, I'm currently biased for this to fill the inefficiency and probably hit this level here. So Ethereum, not really looking too hot. Solana, on the other hand, so it's finally down here. It's most likely going to be bottoming around here, and perhaps we'll see some sort of bounce back up to like 220 or some shit. But right now majors look pretty choppy, as we've been saying. Pretty boring price action, and also as the Bitcoin liquidation heat map, so we don't really know if Bitcoin's going to go up or down next few days, honestly. So it's a bit dependent on whatever happens in the news. But this also reflects on, so AI, the cookie down fund dashboard. So AI coins down a lot, which is the main narrative we like to talk about. But I'll just talk about the price action of the altcoins, though, which is what you guys are mainly here for. So, Virtuals, as a result of this shit-ass price action from Ethereum, mainly because Virtuals is built on it, Virtuals has broken this pretty major support and is honestly probably going to do some sort of free fall, man. I'm not going to lie, bro. It doesn't look good for Virtuals, is all I'm going to say. It broke that support from here. It should have held it for it to do some sort of reversion backwards, but it doesn't look good. I'm not going to lie, man. So, if anything, if we were to try to see a bottom on this, of course, I wouldn't really recommend to buy any Virtuals coins here in specific. Most likely could go down here, but as a result of that, a lot of AI coins don't really look too hot, so game doesn't really look too good. But the thing is that a lot of people have already sold these tokens. Virtuals is the main one, though, so I don't know. We'll see. It doesn't have to go all the way down here. It could be something due to Ethereum, but as how Ethereum looks, this might also even go lower. So AI coins don't really look too hot. If anything, I wouldn't really. You should probably just be sidelined, in my opinion, or you can dollar cost average, but you do it very, very fucking slowly because you don't know where the bottom is for this. And Virtual's token doesn't really look too hot, especially with what's going on with Ethereum, where Virtual's essentially leverage Ethereum. Well, Ethereum doesn't look too hot either. So it's dependent on the majors here. Hope for some good price action, but it's a little uncertain. Base meme coins, on the other hand, so I like KeyCat. Honestly, KeyCat's holding up pretty well in comparison to AI coins. So it should be bottoming around somewhere here. I don't think it goes much lower than like 28 million or something. But even if Ethereum, so KeyCat has actually shown some sort of relative strength in comparison to Ethereum. So I think KeyCat's much better of an option compared to base AI coins. And also in Solana AI, so AI16Z, also in some sort of a free fall, and also with Audic, which is the main infrastructure. Okay, this one's actually really strong, but also, I mean, we could see some sort of bottom here. This one's extremely strong, but it could also try to go a bit lower, but it doesn't really look too hot for AI on both sectors. Also on Solana meme coins, don't really look that great. They honestly, yeah, they actually don't really look too good either. Some of the microcaps are holding up actually pretty well. So Selfie Dog doing pretty decent, and maybe Let Him Gook, the one I was talking about the other time. This one's holding up pretty good in my opinion. So microcaps are actually pretty strong, while the main bigger ones aren't really the best. But in any case, doesn't really look too pretty across the altcoin sector. And what I would suggest you guys to do. So right now, obviously, it's a pretty rough time. It's a bit of a mini bear market. Everyone is shitting their pants on Twitter. They're like, "Oh my gosh, it's over," because pretty much most people are down 90% of their portfolios. And it is this mini bear market within altcoins, and it's because of Bitcoin dominance going to the moon and Bitcoin essentially being very choppy right now, of Ethereum, a lot of bullshit. But I would still say that the main sectors, I mean, Virtual's AI doesn't really look too hot based off price action. So I don't know if I could recommend Virtuals the DCA into within the next few days, weeks or so. You'd probably want to wait to see it bottom at first, and then you would probably want to deploy capital there. But in any case, base meme coins in comparison are much stronger relative strength wise. So I like KeyCat. So, okay, Ski Mask Dog is under 100 million. I mean, this one pretty much did 100x's from the bottoms when it was at the weird stage, so I'm not too surprised by this choppy price action. But the ones that have actually haven't gone up that much, like KeyCat, where it's essentially in this range accumulating, if you look at it, these ones are pretty fine. Even okay, Egg is a lot weaker, also chopping downwards, but it shouldn't go like to the zero or anything. But a lot of coins don't really look too good. And I would still say base memes is probably the best place. So the top ones like KeyCat and what the fuck is this called? The Toshi and Meagles. But in any case, it doesn't really look too hot across the board. So you would probably want to dollar cost average if you wanted to buy any of them. But of course, it doesn't really look that great. I don't really know what to say here, except if anything, probably the best asset to hold in these type of times is to have Bitcoin. But I know that some people are fully allocated, and during these times when you don't really have money to put, and these coins should go back up, at least the base memes and the base AI, probably base memes first in my opinion. Well, in this case, the best thing to do is probably just sit on your hands and pretty much do a lot of learning, reading, maybe do other shit, touch grass. But that's pretty much the general consensus. So that's what I would really say. And regardless, I'm just going to talk about the tweets, just talk about the tweets, the analysis, because we are here every freaking day for crypto news analysis here. So let's go on with the tweets. So Justin, Pump.Fun, hit with cease and desist from Berwick Law, ordered to remove 200 plus IP infringing meme coins. So yeah, this is pretty interesting. We're Pump Fun, where it's essentially the casino of Solana. Well, they're dropping all these fucking meme coins. There's a billion of them per meme. And you gotta realize that at the end of it, there's only gonna be a small select coins from Pump Fund that are actually going to make it, and everyone fucking knows. And it really helps if they have an IP, intellectual property behind them. So the person that's behind the meme, like if there's a dog behind the meme, and the person behind the dog, they give you the rights to that meme, that's gonna give that meme coin a much better narrative than some random Pump Fund shitter that gives a fucking token after that meme. So you want to look for the ones that have a lot of IP rights, which is why I like some tokens. So I'm not going to say, like, I'm not trying to shill these ones, but things that come off the top of my head, like IP coins. Shot a cat on Solana, Volter on the dog coin on Solana, the KeyCat on Cat. Like, the coins that have IP behind them, they have a good narrative better than the other ones. So let's look at the next tweet. I'll sell in 3 months, 6 more months of bull market. I'll sell when my portfolio reaches 500K. Okay, 100K. I'll buy when it comes to my original level. Spoiler alert, the market's indifferent to you. Your goals, your problems. Ask yourself where the market's going, not where you want it to go. Never project your expectations onto the market. Project the market's reality onto your expectations. And yeah, but that's how losers thinks. And you got to realize that. So this is a mistake that I used to make a long ass time ago, where I was like, oh my gosh, I'm going to do all this crazy ass shit. But no, the market doesn't care about your own goals. And what you really should do is play accordingly to what the market does. And a lot of people, they're trying to extract some sort of random arbitrary number goal, like for the portfolio or some shit, based off of what they think the market's going to do everything for them. No, you adapt to the market. A lot of people have it the other way around. So if you're up a lot, then take profits. If you're down a lot, or perhaps token prices are down a lot and you see bottoms forming, then accumulate, right? But let's look at the next tweet. Virtual's protocol expanded to Solana, integrating with Wasabi protocol and building a strategic SOL reserve. Virtual down 67% last 30 days, the token supply increasing via buyback. Meteor pool launching on Solana with 1% trading fees converted to SOL reserve. Chain abstraction swaps coming, SOL for base agents, ETH for Solana agents. 42,000 virtuals and grants for base and SOL builders. AI hackathon at Solana Foundation March 2024. Currently 16,000 AI agents launched on platform. So yeah, I do know that the virtual pro section doesn't really look too hot, but regardless of that, what you know in the background is that they're still building the AI teams, even despite what the market does with Bitcoin. Well, the teams behind the AI ones, so these are actually continuously building compared to meme coins. Well, they're actually going to provide that utility and value, which is going to reflect on a much better price based off speculative value when the market heats up again. So it's essentially just a good thing to look at your projects. You want to see if they're actually building, and virtuals is, I think, is still one of probably the best AI sectors. But in any case, let's look at this next tweet. If you love the thrill of crypto, then all of this is just part of the game. Like if you're an NBA player, just because you lose in the finals doesn't mean you stop loving basketball. People who are here purely for greed don't give a fuck about the space and practice no risk management are the ones hurting the most right now. Volatility equal opportunity. So yeah, a lot of people, they're doing the wrong things with crypto. They're like, oh my gosh, I'm here to make so much fucking money. This is it, bro. But I mean, it's good. That is essentially what everyone is here for at the end of the day, for that motivation to make a lot of money in crypto. But and regardless of that, you gotta not get blinded by that greed and want. You gotta realize there's a lot of rules that apply to you within crypto, and you think you're gonna be that person who catches the 1,000x runner by gambling on all the new launches on Pump Fund. Like it happens to some people, right? But some people is a very small percentage of the population, 0.0001%. They're an extreme exception. Most people fucking lose on these things, and these guys have no risk management, and they end up burning themselves and having no fucking money at the end of it. Or people that do leverage trading, futures, perps, whatever the fuck, and they don't know what the fuck they're doing. Like some of my normie friends are recommending me, dude, you should just do perps and leverage or whatever the fuck. And I'm like, dude, like, first of all, I don't even know how the fuck to do that. So I want to stick to my current edge, whatever the fuck, like not that, at least for now, probably later on. But I don't know how to do that thing, so I'm not going to touch it. I'm not going to be the type of people who think that leverage is a means for you to make more money. No, it's a means of capital efficiency. It's not a means for you to increase your gains, because you also have to realize that risk is exponentially more on the downside compared to the upside. So yeah, let's look at this next tweet. Yeah, increasingly of the opinion that crypto agents will go mainstream as co-pilots on virtual companions. Doesn't make sense navigating a bunch of apps, protocols, or even other agents. You should be able to just say or message, buy this token as you scroll Twitter, or tell me the top trending tokens in crypto AI today. And the agent just does it. And of these agents will be desktop companions, in my opinion, and they'll follow you around between task screen, and you can just tell it what to do. So this guy is giving the future prediction of what agents are going to do, and he's saying we're going to have these agents do pretty much everything for us, and that is pretty much usually the case. And that's essentially where you want to look for the projects that actually might deliver on what he's trying to deliver here, because you also have to realize one of the biggest AI tools that people use, ChatGPT, you just ask it to do shit in natural language. You don't have to do all this bullshit on the computer. You just ask it, hey, I want you to code all of this stuff for me, and ChatGPT gives you a bunch of code, and all you had to do was talk to it like a fucking human. Well, it's essentially easy to use for retail people. So this is next tweet. I'm seeing a few experienced on-chain traders pivoting to perps as on-chain dries up. A word of caution, these aren't ideal conditions to learn. Unlike early stage PvE metas where aggression alone can carry you, perps in this environment are pure PvP, edge is harder to find, and mistakes get punished quickly. The best perp traders I know are sizing small and scalping intraday, adapting to other conditions rather than forcing trades. I had a similar experience as the other way around when I pivoted fully from perps to on-chain at the end of September, but the conditions were completely different. I made the shift alongside a close group of friends who were already great at it, and it happened right at the state of the AI on-chain meta. Timing was on my side, and in those early phases, you don't have to be the smartest, just aggressive. The momentum does most of the work, but transitioning the other way, especially now, requires a different mindset. If you're making a shift out of boredom, be careful. It's easy to give back hard-earned gains to a market that doesn't care. So yeah, a lot of people, they're essentially trying to get super greedy. A lot of people are down and they're like, okay, well, I got to make it all back. And they go back to the purse because they're leverage trading. They think they use that to increase their gains. Well, they're doing it for the wrong reasons. And these guys most likely are going to get burned. But you got to realize that there's a different condition. In times like these, in choppy market environments, you don't really want to be super over trading. You're just going to chop yourself out. But you just got to, most people, if you're going to trade small size, or you just sit on your hands and do other shit outside of crypto. So that's essentially what it's trying to say here. So let's look at the next tweet. So this one's a week old, but I don't think I covered it, but it's essentially a summary of what happened in the market and why the market conditions right now don't really look too hot. So got a lot of questions about how I'm seeing things right now. So here's a longer post of my thoughts. The past 2 weeks have been rough for holders, especially on chain. A series of events has hammered liquidity and shaken confidence. One, Trump token liquidity black hole. The Trump launch kicked it all off. Liquidity got sucked out as people dumped assets across chains to chase it. This drained the market and left everything else weaker. Two, overhyped and underdelivered. Hype around Trump's executive orders fizzled out, major stagnated, and the rest of the market got stuck. Without a short-term narrative to latch onto, things went into limbo. So I just had a thought really quick about this, where a lot of people were super overhyping Q1 to be amazing, and that perhaps Trump was going to send us to the fucking moon and all this shit. But people's expectations have resolved that, and the market's expectations, because the market, the price action is a reflection of people's emotions. They were super expecting of all these crazy Trump orders. And perhaps if he even delivered it, then I don't even think the price would actually go in that much, because it was already somehow priced in. But it was actually a disappointing result, because even things with the last couple of things with the Bitcoin strategic reserve, people thought they would actually come out, but then actually started doing a digital asset stockpile, which is good for alt, I suppose, but it's a bit weird. But in any case, a lot of people, there's needs to be a catalyst for another leg up for the market, and it will probably present itself, since that's usually how the markets go. At least what I can say at a fundamental level is that we do know that the cryptocurrency markets are heavily driven by liquidity, and they have to spend a shit ton of money, the new government policies in the United States, so that money will be flowing in, but it hasn't actually gone into the market yet. So that could be a catalyst from liquidity, but we have to see them start printing the money to enact on their policies, which might happen sometime soon. It's only been about 2 weeks since Trump got into presidency and he did all this shit, and the money printing, it's probably going to happen somewhere down the line. And that's when at least one of the largest factors for another start for the markets. So let's look at the rest of this. On-chain farms in desperation. Scammers milked what little liquidity was left of bad on-chain farms. Some tried chasing low caps to recover losses, only to see prices decline further. AI meta hit by NVIDIA fears. The AI hype took another hit after the DeepSeek R1 model release, sparking concerns about its impact on NVIDIA. This triggered fears that the AI bubble might be topping. Like I said before, NVIDIA is a solid indicator for the AI cycle, but these fears seem overblown. That said, risk assets tend to overreact, and this was no different. PTSD charged and thin liquidity. With liquidity already scarce, new launches are struggling to gain traction. Even when projects do launch, charts are obliterated as participants, scarred from recent losses, exit at the first sign of trouble. SocialFi trading liquidity. Recent SocialFi platform launches drained even more liquidity. Most of the capital is scooped up by KOLs who aren't putting it back into the market. It's pure extraction, leaving the rest of the market weaker. Doubling down goes wrong. Many tried averaging down on losing positions, hoping to cover, but those just keep dropping. With metas changing daily, it's all about chasing whatever sticks, adding to confusion and more losses. What the market needs, there's no quick fix, but a few things could help. One, a new narrative, something broad enough to unite the market and give it directionality. Major macro event in the upcoming week, FOMC might provide direction, so that already happened and already was like pretty much a nothing burger. But surprise announcements, unexpected moves from governments or institutions could bring fresh momentum. Breakthrough in a major meta. A big unlock or new Ponzi in areas like AI that can sustain attention longer than just a flash in the pan. A sharp move to one side, like a downside move to tap into a strong liquidity pocket, or a solid technical area that's particularly relevant for BTC. So that already happened with the largest liquidity event. There was a huge bounce after that, but it started to feel the inefficiency, because when something goes up too quickly, it has to go down. So what's available for now? Trade news and catalysts. Many are off balance after recent events, making trade news easier. You don't need to be the fastest to stay ahead of the majority. Unexpected exchange listings also fall into this strategy. Spot listings. Plenty of new ecosystem launches. Fresh ecosystems, for example, abstract or isolated liquidity hubs. These can still provide opportunities while the broader market struggles. So I just want to comment on that. So I don't know shit about abstract. I haven't done my research on that just yet. But the other thing where the spot listings, so you could try to play that for base. So we know that Coinbase, they're the largest centralized exchange in the United States, where a lot of liquidity is for crypto. So you could try to front run these meme coin listings, which is the narrative for base memes, why they will be pumped into the future. Solana memes, we don't really know, but base memes, at least Coinbase has a shit ton of leverage, which is why people are bidding base memes. So let's look at the rest of this, where scalping specific coins. If scalping is your edge, it's been working well. Keep trades tight and focus, reward yourself after. Play on-chain without drinking hopium. New narratives can still move, but treat them with more caution. Don't hold in hope, watch and adapt. Playing for macro events, look at ahead of key events like the FOMC, figure out which assets might react and why. Those of catalysts in your event plus relative outperformers are easy picks. Be ready when others will try being reactive. It's messy out there. Most are either chasing losses or waiting for something to happen. Trust me, not many are confident in their positioning if they're directional. Stay sharp, adapt to the market, and focus on what's working. Opportunities still exist, even in tough conditions, if you still disciplined and control your mindset. Yeah, I really like this guy's take, but most people, especially in these times, there's not that much to do because it's a little bit of a mini bear market. But in any case, there's a lot of things you can still do where you can do a lot of research, of course. So let's look at the next tweet. Man, imagine getting the crypto after Trump launched his meme coin. Number one, first trade down 80%. Try to make it back with Melania and lose another 90%. Go on crypto Twitter or TikTok, and everyone's advice is to keep clicking. Go on meme scope with zero experience and get farmed by FNFs. Finally give up his majors, get nuked, and see the market rebound and BTC back above 100K so you put more money in to buy. Only need to get rejected at range high and nuked again. At least last cycle, you can make some money with monkey pictures. So yeah, he's talking about the person that got into crypto. So the last few weeks have been absolutely fucking horrible for the whole market. And somebody that just got into crypto and we're like, oh my gosh, the Trump coin, oh my gosh, because we know that Trump coin onboarded a lot of retail on the Solana chain. A lot of people most likely got wrecked on that because they don't know how to take profits. And they're like, oh shit, okay, well, I'll make it on Melania's coin. Melania's coin went to zero as well. They're like, okay, well, what the fuck do I do? So they go on Twitter and everyone's like, oh, just keep clicking, bro. Just lock in. And they're like, okay, so I go to Solana Pump Fund Trenches. But Solana Pump Fund Trenches is the fucking, it's a slaughterhouse for most people. 99% of people are unprofitable in there. And they probably lose their money in there too. And they're like, okay, well, what the fuck, man? This sucks. So they capitulate at the bottom. So the major's nuked, and they're like, okay, well, it's over. And then they see Bitcoin go up to 100K. And they're like, oh my gosh, this is it. And then they ate back in at the top, and they're like, okay, I'm gonna make all my money back. And then okay, it goes back to the fucking range middle. And now they're just like, okay, what do I do? So they're just trapped, man. That's the story of most people. But let's look at the next tweet. Welcome to altcoins, friends. So portfolio loss minus 10%. So you got to see that a lot of this downside is pretty big in comparison to the upside. But the fact of the matter is that since a lot of coins are down a lot, well, it's pretty much as quick for them to go back up, especially when liquidity goes back. So if you're down a lot, I am also down on these, then most likely what you want to do is just wait for the liquidity to come back and then cut the ones that you don't think will come back. So this is the next tweet. Before criticizing as you can see or any AI tokens that drop, just take a look at Fartcoin. Fartcoin also dropped from 2.6 billion despite having strong sentiment, high mindshare, and significant inflows. This is about the token. It's about the market. Yeah, Fartcoin. Fartcoin was one of the strongest coins, right? And then we look at the Fartcoin. So yeah, 400 million. This was at 2.6 billion. It was one of the strongest ones. And then even this one, which was probably one of the strongest alts, is down in the pits. So this is not because Fartcoin got like less funny or anything. It was because of the market conditions. And I don't think this goes to zero because it has so much Lindy, but this is insane to see what happens. So let's look at the next tweets. Okay, Luke, I get all doom and gloom on AI shitters right now, but it's crazy. Virtual teams literally met with X staff to collaborate about future plans. If there's anything other than the worst alt bear of all time, token of immediately 2x. Instead, it's down 90% on today's skull emoji. Yeah, so Virtuals is still building. And the last thing here, where McDonald's, it seems that they said, just put the fries in the bag, bro. McDonald's is dunking on the ball. So it's kind of funny that a lot of people, they're unironically applying at McDonald's because they're completely broke from gambling on the shit coins on Pump Fund. And that is the case for some people in crypto. Like, actually, it's not actually a joke. And in that case, McDonald's probably has a lot of applicants coming in. But that's pretty much all I want to say in this video. Currently, the market conditions are extremely choppy. There's not really much to do. It's a little bit of a mini bear market right now. And we don't know what's going to happen. I can't really give you a prediction. It either is going to do a impulse upwards or an impulse downwards. It's really uncertain right now. I can't really give you a precise answer on where I think it's going to go in the short term. But at least in the midterm, long term. So I do think alts has resolved this market. So if it wasn't for all the Trump and the Melania shit, and all the deep sea bearish news, these black swan events for crypto, we would easily be rallying above all-time highs right now for Bitcoin, and altcoins would be having a much better time. I don't think they'll be like super rallying, but at least they would be at a start of uptrend, But in any case, not really looking too hot right now. And as a result of that, the altcoins do have to go sideways for the next few weeks. And we might not see more up until around March or April or so. So that's my current bias. But regardless, I'm still going to come back every day and give you guys my news and analysis. But if you wanted to know where to look, so I would still say base memes is the focus. Base AI doesn't really look too hot. A little bit of a bleed. It's pretty much free falling. You might want to look for the bottom before you want to bid on that, or DCA extremely slowly. You don't have to try to catch the bottom here. But also Solana AI, Audic is probably one of the best tokens out there from the AI projects. I don't have it, but maybe I should if it goes. I don't know. I got to do some thinking about that. But still, it's pretty much still the same place to look. But yeah, I'll see you guys.